Welcome back to Liberty in Finance. We're glad to be here at the Rule Symposium on Natural Resources Investing in Boca Raton, Florida, here this week. And we're bringing to you lots of companies who Rick has personally selected as being exceptional values. You know how hard he works at digging in to find value before others recognize it, and that's part of his contrarian approach. We're specifically with Dave Cole, the founder and CEO of EMX Royalty. Dave, thanks for joining us this first time on Liberty in Finance.
Again, my pleasure. My pleasure.
We're here and wanting to find out more for our viewers about your company in particular. But first, we would be delighted if you could give us your personal viewpoint on the macro supply and demand dynamics and the trends that you see in place going forward that are leading people to focus on now at this time looking for value in the precious metals arena. And if you could let us know what you see there and maybe what EMX is doing about taking advantage of those opportunities.
I can answer that question head on. And I would expand the question, not just precious metals, but also strategic metals. And across the board for many decades, if not a century, we've seen a strong compounded annual growth rate in metal demand around the world. This is driven significantly by class creep as people go from poverty to lower class or lower class to middle class. The amount of consumption that they had goes up dramatically. And we see this in metal demand. I'll zero in on copper, which is the most important strategic metal, perhaps. We expect that the globe will consume as much copper in the forthcoming 22 years as we have consumed as a humanity for all of history. And that's rather astonishing when you think about it. And it's a challenge to the mining industry to accomplish that. My opinion is the only way that can be accomplished is a substantial increase in capital going into the sector, and in all likelihood, a substantial move in metal price, which would result in a decrease in the cutoff grade, the economic cutoff grade, which would make more resources, ore and reserves. And that's one way for the industry to accomplish that. But I think that times look good for folks that produce metal. The EV part of the equation is something that people love to talk about. It's an important part of the equation, but the overall demand for metals just continues to augment. And there's no shortage of loose monetary policy on behalf of governments. And of course, that's always bullish for precious metals.
Right, because that's one of the concerns that leads our subscribers to want to pay attention to real things, whether it's commodities, including metals, but also in precious metal bullion investing, sound money. They're concerned about the destruction of the purchasing power of the currency. And so one of the things that Rick reminds us is that even though we're trying to maintain liquidity so that we can take advantage of opportunities, such as finding out about companies that he thinks are valuable to invest in, that people also keep some of their powder dry for opportunities to protect their family by acquiring real assets. So EMX Royalty Corp, Rick has talked to us for years about why royalty and also streaming, but royalty models are helpful. In other words, companies that don't have to be exploring or developing or even operating mines, but having a beneficial relationship with those who are operating mines. Can you talk to us about what is it in the current environment that EMX has done to position themselves to take advantage on behalf of their shareholders of opportunities that you're looking at right now?
So I'll start by simply saying, Dunnigan, that royalties are phenomenal financial instruments. And they're fantastic financial instruments because of their embedded optionality, which is what you were referring to. Once the royalty is created, and there's a number of ways for royalties to be created. But let's say a prospector acquires a mining claim and they sell it to a mining company and keep a royalty. Now they've created that royalty, they own that royalty. That prospector is now exposed to all the upside on that property that occurs. And that could be metallurgical advancements, engineering advancements. Of course, we all want to be exposed to commodity price. So that's commodity price optionality. And then most importantly, the geologist and the drill rig finding more ore. And those are all compounded. They're multiplicative, in fact. Mm-hmm. And there's a number of examples of royalties that have been created that had a de minimis value when they were created that are now worth a substantial amount of money, upwards of $1 billion. And so they're just great assets to own. And because of what I said previously about the overall increase in demand for metal across the board, one wants to be exposed to as many mineral rights as possible. And the best way to be exposed to mineral rights are royalties.
Now, as a royalty generator, how is that different from a company that just owns royalties? What is it that EMX does and does serially? Rick always talks to us about serially successful companies, and I think that's one of the things that attracted him to EMX. So what does EMX do to make it a royalty generator?
Royalty generation is our hedgehog. We're known in the industry as the most prolific generator, and royalty generation is an outgrowth of the prospect generation business model. This is where we utilize our economic geology talent around the world and business acumen to actually acquire the prospective mineral rights, the underlying mineral rights, staking mining claims in Nevada or Arizona or Idaho, for example, acquiring exploration licenses in Norway, Finland, and Sweden, etc. We work in 13 different countries. And then utilize that geologic talent to coalesce the data, acquire additional data and interpretation in the field, illustrate the prospectiveness of those assets, sell that on to an industry hungry for discovery opportunity in exchange for cash shares and royalties. We've sold 102 projects in the last 5 years. We are definitely prolific at this process. We're known in the industry as the folks that do this the most. And that's our defining feature. We also buy royalties, buy existing royalties from other people and companies that have royalties that we can sell, or that wish to sell them and we can buy. And so we grow our royalty portfolio through the purchasing of existing royalties and the organic growth of those royalties. I believe that the combination of those two is a very powerful way to approach the royalty business.
Right now, where we sit, if our subscribers are considering becoming beneficial owners of EMX through purchasing its stock, what should they be aware of as far as your immediate plans for the next, say, year, so on? And what would be different a year from now than where we are right now with EMX?
We're in a very interesting position right now, Dunnigan. We've been building this portfolio for 20 years, and largely through that royalty generation process, but also some key royalty purchases to augment that. And as a consequence of that, our cash flows are just turning positive in a nice way. So we are going from a junior company that's been building a royalty portfolio to a mid-tier company with strong cash flow. And we're at that hinge point right now.
And, okay, tell us how the market generally or overall rewards or establishes a market value for the companies that are making that transition.
So the marketplace will definitely value that cash flow and give us a multiple on our NAV5 is a common way for folks to, for example, the big Canadian investment banks, they analyze royalty companies looking at their NAV and then a multiple to that. For example, Franco-Nevada trades around 2.5 times NAV5 according to Scotiabank. It's just one example. And Franco-Nevada is the premier royalty company in the space and have led the pathway of really building the model for a modern mining royalty company. So we'll definitely get valued on that cash flow aspect. But the interesting thing is the reason why you want to be exposed to a royalty portfolio is because of the discovery optionality. It's the discovery optionality that really gives you the big bang in the stock price. And so those can occur from deep in the portfolio. So if you have a huge amount of early stage assets within the portfolio and a handful that are actually cash flowing, you'll be largely valued on that cash flow at the top of the pyramid. But the discoveries being made at the base of the pyramid is where you can get a big bang in your investment.
Yeah, that would be essentially unrealized value that's latent because it hasn't been discovered. When it is discovered, suddenly there you get this big surprise upside to the value of that asset.
David Harquell, the chairman of Franco-Nevada, one time said to a auditorium of people when he was giving a presentation that some of their best royalties were projects he didn't know the names of 5 years prior. So, it does happen. And across our portfolio, there's 100 kilometers of drill holes a year being paid for by someone else. Please keep in mind that this is a great thing about royalties. Someone else is paying for all that exploration work, development work, mine building work. And when we have inflation and cost over.
That's what I was going to ask you next was about inflation. Inflation is a big concern. We mentioned way back at the beginning when we just got started about people concerned about purchasing power erosion of their currency and their savings and their earnings and their retirement. But how does inflation disproportionately impact the companies that are operating mines versus the royalty owners like EMX?
So inflation can be a great thing for the royalty holder because it likely will impact the commodity price. And as that commodity price moves up, then the value of our royalty is more. These royalties are nearly always off the gross income to the company, the gross receipts from the smelter. So If the value of the commodity goes up, then the amount of money that comes in our door goes up. If the amount of money it takes to accomplish that goes up, that's not our problem. That is not calculated in the royalty equation.
So the increase in fuel costs for operations or
Correct.
parts and labor and all that for operations does not directly calculate in. I mean, the long term, your success, your operating company's success becomes your success by their being able to continue doing that, to afford to continue. So we all hope for favorable business conditions that allow continued operation of these assets. But the fact is, the royalty companies it sounds like they're going to be benefiting based on the top line anyway.
And if we backward test that hypothesis, you can see that the long-term compounded annual growth rate of the royalty company stocks has outpaced that of producers. Yeah, it's a great business model. And the one interesting thing is that a number of different royalty companies have approached the space with a different model, and they've all done well. And they've all done well because royalties are just great things to own.
It's a compelling story, and it's one that when we pay attention when Rick pays attention to something. So we're grateful for that, and we're grateful for the chance to introduce you to our subscribers. David Cole, CEO and founder of EMX Royalty Corp. Thanks for joining us on Liberty and Finance.
Donegan, my pleasure.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for July 31st through August 6, 2023, while supplies last. This week we featured 2023 1/10 ounce gold eagles at just $37.50 over melt. The gold eagle was first released in 1986 and has been one of the most popular gold bullion coins in the world, providing incredible recognizability and investor trust. The 1/10 ounce eagle is additionally sought after for its high degree of flexibility and liquidity. Like the 1 ounce eagle, the 1/10 ounce eagle is 22 karat gold strengthened with copper. It's 1/10 of a troy ounce of gold. Comes 50 to a tube, 5,000 to a box, and is available at just $37.50 over melt while supplies last. Finally, the Gold Eagle is IRA eligible. And if you'd like to learn more about a precious metals IRA, call us and we'll be happy to help you in that process. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.